Hey, how's it going, Global Studies class? Welcome on back. It is Thursday, May 6th, 2021. Hope you're having a wonderful start to the week. I mean, it's pretty much the end of the week now, so that's nice. What do we got? Last class review, y'all started researching taxes. Now, there's a few things I want to talk about. Let's review some of those things we went over. Sales tax. That was one of the things we talked about. Sales tax was the example I gave you of the candy bar not being 99 cents, $1.03. Sales tax is almost everywhere. Anytime you buy something, there's a sales tax on it. A lot of times, you have no choice. Really, all the time you have no choice. Back in the day, they would build the sales tax into the price. Some stores do that now, so when you see like a 99-cent store and everything is 99 cents, sales tax is just built into the price. It's like a 96-cent thing, but they take into account how much tax is. They make it 99 cents. You give them 99 cents, you're good, but you're still paying sales tax. Property tax, that's taxes you got to pay on the property that you own. Pretty simple. And then income tax. Whole bunch of different styles of income tax. Really, I shouldn't say a whole bunch. You have federal and you have state, and that's really for everything. You always got to pay state taxes. You always got to pay federal taxes. Federal's talking about the nation, USA. State, obviously talking about the state that you live in. Now, there are some states that have no state income tax. An income tax is how much you get taxed on the amount of money you make from your job. So this was one of the other examples we talked about, where your first job, some of you have already had it. Some of you will have it, hopefully soon. You'll be like, yo, half of my check is missing. It's not. It went to income taxes. Now, federal, the U.S. takes a lot of that. And then the state takes some of that money as well. So you're getting it from both ends. It is rough. Few states that don't have state income tax, Florida and Texas, I know are two. There might be a few others. Arizona, unfortunately, they do. They have state income tax as well. So you pay a lot of money in taxes. And here's the thing. Taxes, you don't even pay. They take them from you. Like I said, you get your check, and they already jacked it out of your paycheck. It's not like, oh, I'm going to pay my taxes this month because I got a lot of money. You just get your check, and the taxes are already taken out of it. So that is probably the most important one, and that's what I want us to really be focusing on for this debate. We're going to be talking about income taxes. I'm not going to tell you what the debate prompt is yet today either. We are only going to go ahead and move on to our guided questions. It's day 2. However, the guided questions are a little bit different, and they're a little bit harder than normal. You've got some work that you have to do. You have some math that you have to do. You have some research that you have to do. I know. It's probably going to be the most research you've done for a guided question day in a long time. So let's go ahead and take a quick look at the guided questions. I sent them to you in your email, but also we're going to take a look at them right now, and I'm going to go through and explain it very quickly. All right, ladies and gentlemen, so this should match exactly what is in your email. Obviously, put your name on the top, and we see United States tax research. So this is all going to be about U.S. taxes, not state income, but U.S. income. And we're going to answer the following questions based on the chart above. That doesn't make chart below. We're going to save that. And your previous knowledge of the United States tax code. So we don't know a lot about the United States tax code unless you researched a little bit last class and found something in there. This right here is our tax code. It's what people commonly refer to as tax brackets. If you say you moved up in a tax bracket, these are the brackets. There's 1, 2, 3, 4, 5, 6, 7. The lowest, 10%, the highest, 37%. Now, the United States figures out how to take taxes based on how you file. You can file as a single person. That means you are not married. Head of household means you are not married, but you have some people living with you. Perhaps you have a, baby mama, baby daddy, and a couple kids. You can file as head of household. Married, filing jointly, or qualifying widow, that means you're married to somebody, but you want to file together, and you're going to both be doing your taxes together. Or married filing separately, that means, hey, I'm married, but I'm going to do my own taxes. My wife is going to do her own taxes, completely separate. So jointly means together,
Separate obviously means separate. Head of household means you got some other people in your family, but you're not married. And single is, oh, it's just you. I should say that I mentioned they straight take the money from you, but in April of every year, this year was April 15th, it was pushed back due to COVID to May 15th, but you have to file your taxes and you tell the government how much you made, and they take a look at how much they took out of your checks. And then based on what you decided earlier on when you took your job, they tell you if you owe them more money or if you get money. If you get money, it's called a refund. You get a tax refund. But the basics is that all of those numbers are kind of based on these brackets right here. So most of us are single. So let's take a look at the single bracket. If you make $0 to $9,875 in the total year, you will pay 10% of that in taxes. 10%, that's an easy number to figure out, right? 10% of $9,875 is $987.50. That's what you would pay in taxes. Now, you see, as your income goes up, the tax rate goes up. So there's a big jump right here. If you make $9,000 to $40,000, you are in the 12% tax bracket. You only pay 12% in taxes. But if you make $40,000 to $85,000, boom, you jump up to 22%. That's 10% more. That's a lot more money. Then if you make this much single, 24%, and it keeps going up until 37%, where if you make $500,000, $518,401 or more, you have to pay 37%. And 37% is a lot of money. Now, you're going to use this information to answer a lot of these questions. For example, 1, 2, 3, 4, 5, 6, 7 are all questions that you have to answer based on this. 8, oh, I'm nice. I already told you what 8 means. 9, 10, 11, and 12 are questions that you will not answer based on this. That's where you're going to have to do your research. All right? You're going to have to look online or, call the IRS and have them explain it in detail. Please don't do that. Don't call the IRS. You don't want to deal with that. But for question 11, you're going to have to research, find out what the IRS is, and explain in detail. 5 or more sentences. All right? This is your assignment. Like I said, the first 7, 8 are all right up in here. Then the rest are all research that you have to do yourself. And this is what you're going to be working on today.
All right, y'all, there you have it. Assignment, simple enough. Complete the questions sent to you in your email, the guided questions that we just went over. That is due today. If you have any questions or if you need any help with it, shoot me an email, call the school, do whatever you got to do. DM me on Instagram. The school's Instagram. I don't have Instagram. Get me the question if you have a question. If not, give me the assignment by the end of the day. If you guys, I guess I said if you need anything, I'm here. But if not, have a wonderful rest of your day. Have a good Friday tomorrow and a great weekend. And we'll see you on Monday. Take care.